evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. It was a very difficult contract, the September futures and options contract. And actually the series has ended down 1% for the Sensex and the Nifty. Bank Nifty largely flat, though Nifty Junior, the momentum boys have lost a good 4%, 3.5% this series. But for the day itself, the market ended with a little bit of gains, closer to the 7850 mark. It was an important contract ending, especially because although we ended the whole series with just 1% in terms of losses, at one point in time the Nifty had gone as low as almost 7,500. So both the day and the contract actually have ended with perhaps good news. Hi, Surabhi.
Hi, Lata. Yes, not a bad way to perhaps end the September series and the week, given the kind of volatility that we've seen today in a small, narrow trading range. On that note, let's quickly start with the headlines. The market consolidates in a narrow band on the F&O expiry day. The Nifty gains 0.3%, ending just above the 7850 mark. The Sensex ends 40 points higher. IT and FMCG stocks see some buying, but infrastructure and metal shares remain weak.
Midcaps trade in line with Bluechips, with the index gaining 0.2%. Pharma rallies 13% as the company considers the sale of its overseas arm to cut debt. Oberoi Realty gains 4% on an upcoming project launch at Oberoi in Mumbai. Monet Ispat surges 10% after CNBC TV 18 reports that JSW Energy is set to acquire 74% stake in group company Monet Power.
Lupin emerges as the day's top Nifty gainer after Nomura and Credit Suisse upgrade the stock to an outperform on strong product approvals. Credit Suisse raises its target price by 27%, citing high upside potential from the company's diabetes drugs.
And the government offers more MAT relief for minimum alternative tax relief. It clarifies that the minimum alternative tax will not apply to foreign companies that have no permanent establishment in India and are covered under double taxation avoidance agreements. The exemption applies retrospectively from the 1st of April 2015. Well, those were some of the headlines, and here are the experts that we have lined up on the show for you. UR Bhatt of Dalton Capital Advisors will join in with his take on the markets. We will also get you the management of IDFC to talk about their banking operations which launched today. The management of HCC will talk about their new order win, and the management of Container Corp talks about their road ahead.
All right, but before we get to all that opinion and analysis, let's get you the details of today's action. On the Loud Street, volatility has been the only constant in the September series. But on expiry day, we saw none of that. Markets ended a range-bound session with some marginal gains. It was a rocky ride, the series, with major indices losing over 1%. Midcaps taking, of course, a much bigger hit. We've got Anuj now joining in with a wrap of the day's trading highlights. Anuj, a tame end to what has been a roller coaster September ride?
A bit of an anti-climax actually, the expiry, because after the kind of series that we have had, expectation was that the market will make a big move, or one last big move was pending, but maybe the market has had that move between Monday to Wednesday. So the expiry didn't really have any fireworks, though it did have fireworks for individual stocks that I'll talk about in a bit. It was a volatile series. The Nifty moved 500 points and ended flat. After all that, IT stocks led gain today, and select banking stocks were weak. So let's talk about some of the stocks then that led the market. On the way up, it was all about IT stocks, led by Infosys. That stock was up about close to 2%. HCL Tech was up 3%, and Tech Mahindra was up about close to 2%. In terms of other stocks that supported the market in terms of heavyweight action, ITC, that stock was quite strong today, up 2%. HDFC 1.3%. And look at the move on Maruti from 4100 back to almost lifetime highs. It's been one swift move on this particular stock. On the losing side, 3 PSU stocks, all heavyweights, were down quite a bit in trade today. ONGC, NMDC, Coal India, all down between 3 to 4% in trade. Some other losers today included stocks like Tata Motors, which has now become half of what it was at its high point. ICICI Bank down 2%, and Larsen & Toubro as well down about 2%. And some other losers include stocks like Reliance, Tata Steel, and Bharti Airtel as well. Some mid-caps stood out today in terms of outperformance. The likes of South Indian Bank, Balapur Industries, or an Exide, all of them up between 4 to 11%. So we put behind a volatile series. We're now going to enjoy an extended weekend of 3 days and of course come back on Monday morning. Monday morning, don't expect too much action because the trades will now be taken post-Tuesday, the RBI monetary policy.
All right, Anush, thank you so much for that. On that note, let's get in a market voice. UR Bhatt, Director, Dalton Capital Advisors, believes that as long as earnings do not disappoint, the market will find support at current levels.
I think earnings season might not really give a great flip to the market, but at least as long as it doesn't disappoint, I think the market would find some support at these levels. There are structural problems. I mean, if you say there is a huge difference between repo rate and SBI base rate, given the level of NPAs in the system, I mean, all these NPAs have to be sorted out only through increased profits. So therefore, it has to come through. So therefore, structurally, it is not possible for them to cut interest rates so easily when the NPAs are mounting. If you go by the domestic economy and the domestic corporate earnings and stuff like that, I think 7,500 looks like being a very good support. But the only joker in the pack is how China plays out. Pharma sector was really affected by the huge problems they had with FDA. That I think is slowly sort of getting resolved. Not everything is resolved yet, but I think early stages of some resolution on the FDA front. Most of the big pharma companies in India. And once that happens, given the fact that the US economy is doing reasonably well, I think they should have, and they're big exporters to the US, the big ones at least. So I think things should look all right there. I mean, it may be an outperformer vis-a-vis the market for some time now.
All right. The government has announced a major relief for foreign companies. The retrospective imposition of the minimum alternative tax will not apply to foreign companies if the country of their origin has a double taxation avoidance agreement with India. Earlier, the government had provided relief to foreign investors. Here's what experts are making of the development today.
This is certainly positive news from a business standpoint and the environment of doing business in India standpoint. Clearly, this ends a lot of uncertainty which has gone on for some time, particularly after the recent amendment which was made prospectively. So if all foreign companies not having a permanent establishment or place of business in India are regarded as not being subject to MAT from 2001 onwards, that's certainly a very, very welcome move.
All right, let's get you some more stock-specific action now. Monetary Ispat and Energy was one stock which rallied in trade, gaining more than 10% in an otherwise flat market. This after CNBC TV 18 broke the story that JSW Energy could be acquiring as much as 74% stake in Monetary Power. Prerna Barua, who broke that story, is now joining in with the details. Prerna, how is this deal likely to be structured and who will service the amount of debt? We're talking about 5,000 crore rupees, right?
Well, absolutely. The lenders to Monetary Power are still working on the structure of the deal, but we understand that the lender consortium that is led by IDFC are in active discussions to take the structured debt restructuring route to convert Monetary Power's debt into equity. We learned from our sources that lenders are looking to convert 26% debt into equity, and JSW Energy, on the other hand, is likely to acquire a majority stake at a 74% stake in Monetary Power that operates the 1,050 megawatt thermal power plant in Orissa. Now, the enterprise value of Monetary Power is expected to be at around 7,000 crore rupees, out of which Monetary Power's debt stands at about 5,000 odd crore rupees, and JSW Energy is likely to service this outstanding debt of Monetary Power, which will further add to JSW Energy's existing debt of 15,000 crore rupees. Now, additionally, we also learned that JSW Energy is also likely to infuse about 1,000 crore rupees towards completion of the power plant, and another 1,000 crore rupees could perhaps be infused by the lenders. Also, IDFC is likely to have an exposure of about 300 to 400 crore rupees in Monetary Power. In fact, senior officials of JSW Energy say that the due diligence process is still on and that they are yet to finalize on the deal structure at this point in time. Back to you.
All right. Thanks a lot for that, Prerna. The countdown has begun for IDFC to start its banking operations. Today, the logo of the soon-to-be bank was launched in Mumbai. The chairman of IDFC, actually the vice chairman of IDFC, the chairman of IDFC, Rajiv Lal, has quit the company to take over as the executive vice chairman and managing director of the bank. The bank also revealed that 15% of its total loan book will be stressed. Ritu Singh, who was at that press conference, is joining us with all the details. Ritu.
Well, let me start by first describing some of the key personals that will be at the helm of the bank. So Ajay Baijal will become the non-executive chairman of the bank, followed by the non-executive vice chairman and managing director, which will be Rajiv Lal. Some of the other key personnel that will hold the key positions in the bank, those will be Ajay Mahajal, Naval Kumar, Ravi Shankar and Sunil Kakkar, who will be the CFO of this bank. As far as the financial picture of the bank is concerned, when it launches on day one, it will start with a 70 to 80,000 crore balance sheet. It will also say, the bank also says that it will grow its bottom line by a good 10 to 15% in each of the successive coming years. And because of the provisions that it has been making on its bad loans for the last 6 quarters of about 4,500 crores, it will not have an overhang of bad loans when it opens the bank and will have net NPAs of only 2 to 2.5% as of 1st of October. The stressed assets, which is the restructured as well as bad loans put together, that will account for about 15% of the total portfolio. So that is the financial picture of the bank. As far as its business is concerned, 2/3 will be its core strength, which is wholesale and commercial banking. The other 1/3 will be personal and business banking. The operations for personal, of course, will only start by January and not on 1st of October. The other crucial things that were announced by the bank today were that the rural portfolio, which will be a new business area that the bank will be venturing in, that will have a portfolio of about 10 to 15,000 crores to start with in the next few years, and they will grow their customer base from 400 currently to about 15 million customers in the next 5 years, most of which will come from these rural areas under their Bharat Banking. Of course, it will launch with about 23 branches as of 1st of October, 15 of which will be in the rural areas of Madhya Pradesh. The bank does aim to start about 60 branches by the end of this year.
All right, Ritu, thank you so much for that. Let's now listen in to what the Executive Vice Chairman and Managing Director of IDFC Bank, Rajiv Lal, had to say.
2/3 of our balance sheet, of our loan book, let's say, not our balance sheet, but our loan book, will be wholesale and commercial banking. And 1/3 to 40% will be personal banking, business banking and Bharat banking. We are starting with a pretty large NPA book, but it means that the provisions against those NPAs are very aggressive.
We'll, of course, hear more from the Vice Chairman Rajiv Lal in the days to come as he begins to head a bank. Well, it's expiry day, expiry of the September contract, and 6 additional securities were listed in the derivatives market today, and they will be available to trade from the 28th of September for the October contract. Nigel D'Souza joins in with more on what to expect. Nigel, tell us about the new entrants.
Well, 6 securities in today's trading session were very active on the back of an exchange circular which said that now these 6 stocks that were available for trading in the cash market will also be available for trading in the derivatives market. So come September 28th onwards, we'll see that these stocks will be admitted to the derivatives market. The stocks are up for you on the screen. The likes of Bharti Infra, Cadilla, as well as BML, all of them opened up well in the green, though they ended with very, very marginal gains in trade today. Marico, though, that stock ended with a gain of close to around 1.5%, while NCC as well as TV18 Broadcast, both those 2 stocks, they bucked the trend. They ended with gains of around 4 to around 6.5% in trade today. Standard disclosure, TV18 is the owner and producer of the channel that you're currently watching. So going ahead, we're likely to see volatility pick up in these stocks as well as volumes. Nonetheless, in today's trading session, all of them were buzzing around and ended well in the green.
All right, Nigel, thank you so much for that. Time for a quick break, but coming up on the other side, Sudarshan Sukhani is going to be joining in for a technical chat. We will also tell you about all the stocks that were in news today.